What if I told you the secret to unlocking a business loan wasn't about navigating a labyrinth of traditional bank applications, but was instead already happening behind the scenes, right within the tools you use every day to run your business? For countless small business owners, the question of how do I get a loan is quickly followed by, and who will actually give me one? The world of business finance can feel like an exclusive club with an impossible to find entry key. You've heard the stories. Endless paperwork, credit score hurdles, collateral demand that feel like you're putting your firstborn up as security. It's enough to make even the most ambitious entrepreneur throw in the towel before they even start. So, how does Square go about determining your loan offer? It's not just one factor, but sophisticated interplay of several key data points, all derived from your activity on the Square platform. Let's break it down piece by meticulously analyzed piece. The first and arguably most foundational element is your processing volume and history. This is the bread and butter of your business, the lifeblood flowing through your Square account. Square meticulously tracks your sales data, not just the total amount, but the consistency of your sales, your peak periods, your slow seasons, and your year-over-year growth. Are your sales trending upwards? Are they consistent week after week, month after month? A steady, growing stream of transactions signals a healthy, reliable business. Irregular or declining sales might raise a red flag, indicating potential instability. Think about it from a lender's perspective. They want to see that you have the consistent cash flow to repay a loan. Your processing volume on Square provides exactly that assurance in real time. It's a dynamic picture of your revenue, far more accurate than static financial statements from months ago. Beyond the raw numbers, Square also looks at your customer mix and transaction patterns. Are you relying on a few large transactions, or do you have a diverse customer base with many smaller sales? A diversified customer base generally indicates less risk. If one large client decides to take their business elsewhere, it won't cripple your revenue stream. Square's data can illuminate these patterns. Are you processing many small, frequent transactions like a coffee shop or fewer, larger transactions like a custom furniture maker? Both can be viable, but the risk profile and, consequently, the loan offer might differ. They're looking for stability and predictability in your income streams, and the granular detail of your transaction patterns helps them build that picture. Next up is your payment processing history and chargeback rates. This is where your operational hygiene comes into play. A low chargeback rate indicates satisfied customers and efficient operations. A high chargeback rate, on the other hand, can signal issues with customer service, product quality, or even potential fraud. Square, as a payment processor, is deeply invested in maintaining a healthy ecosystem. Businesses with a history of low chargebacks are seen as more reliable and less risky. It demonstrates good business practices and a strong relationship with your customers. Conversely, frequent disputes or chargebacks erode trust and signal potential problems that can impact your ability to repay a loan. This isn't just about your credit score. It's about your operational integrity. Then there's your engagement with other Square products and services. This is where the power of the integrated ecosystem truly shines. Are you using Square's payroll services, inventory management, or appointment scheduling? The more you integrate your business operations with Square, the more comprehensive and accurate a picture Square can build of your financial health. For example, if you're using Square Payroll, they have direct insight into your employee expenses, a significant part of many businesses' overhead. If you're using Square for invoicing, they can see your accounts receivable. This holistic view allows Square to understand your cash flow in a much deeper way than an external lender could. It's like having a financial detective constantly gathering clues about your business. And the more clues they have, the clearer the picture becomes. It also demonstrates your commitment to and reliance on the Square platform, suggesting a stable and ongoing relationship. Now, let's talk about something that might surprise you, your business's industry and typical cash flow cycles. Square processes payments for millions of businesses across diverse industries. This gives them an invaluable, aggregated data set. They understand that a restaurant's cash flow cycle is different from a seasonal retail shop, which is different from a service-based business. They factor in these industry-specific nuances when assessing your eligibility and crafting an offer. A dip in sales for a seasonal business during its off-peak period might be perfectly normal and expected, whereas the same dip for a non-seasonal business could be a cause for concern. Square's vast data allows them to normalize for these industry variations, offering a more nuanced and fair assessment. They're not comparing apples to oranges. They're comparing your apple to other apples in the same orchard. It's also crucial to understand that your past repayment history with Square Capital, if applicable, plays a significant role. If you've previously taken a loan from Square Capital and repaid it successfully and on time, this builds a strong track record of reliability. It demonstrates your commitment to your financial obligations and significantly increases your chances of receiving future offers, often with more favorable terms. This is essentially building your Square credit score, a testament to your trustworthiness within their lending ecosystem. It's a virtuous cycle. Borrow, repay, and gain access to more capital and better terms. So, in essence, Square's loan determination process is a sophisticated, data-driven approach that leverages your real-time business performance to assess your creditworthiness. It's less about a single snapshot of your financial history and more about a continuous, dynamic evaluation of your operational health and potential. By understanding how Square analyzes your data, from your processing volume and history to your engagement with their ecosystem and your repayment track record, you can take proactive steps to improve your chances of receiving a favorable loan offer. For instance, focusing on consistent sales growth, maintaining low chargeback rates, and actively utilizing the various tools Square offers can all contribute to building a stronger financial profile in Square's eyes. It's about being a healthy, well-run business, and Square is simply using its unique vantage point to recognize and reward that. The key takeaway here is that your Square dashboard isn't just a reporting tool. It's a powerful financial engine quietly working to identify and unlock funding opportunities for your business. It's a testament to how technology can democratize access to capital, moving away from rigid, exclusionary models toward a more inclusive, data-driven approach that truly understands the unique needs and rhythms of small businesses. With that said, thanks for watching, and until next time.